take this time to introduce to you Jamie Fatheree. Jamie has worked at the credit union for over 23 years, and she has spent the last 10 years in the financial wellness department. She is designated as a certified credit union financial counselor and says that her favorite part of the job is hearing from members who are excited to share that they have met a goal that they've been working on, because that's when she knows she's made an impact in their lives. And she has impacted many lives in her financial wellness journey. She has booked well over 1,000 new appointments throughout the years. Jamie's seen the ups and downs of credit score in her own personal life, and as a result of that experience, has helped hundreds of other members to improve their own credit score. Needless to say, she knows what she's talking about. You know, experience it's bliss, and it's one of those things that without that, at times you're not confident of what you're talking about, but she's very confident. So, Jamie, I'll check back with you later. For now, the floor is yours.
Thank you so much, Vital, and thank all of you for joining us today. This is sort of a new topic for us, and we're kind of taking a look at building credit from the ground up. So really focusing on members who may be starting out for the first time, you might be young, entering college or just after, and you're looking at building credit for the first time. Or maybe you're starting over, you've had something happen, and now you're having to rebuild. So wherever you are in your credit building journey, you should be able to get something out of this presentation today. So what we're going to be talking about, again, looking at it through a lens of somebody who's new to this, we're going to get pretty basic here. We're going to talk about why credit's important, how credit works, how credit scores are calculated, what's considered a good score, and of course, how you can build your credit score. We're going to start out with a poll. Butel, would you mind helping me out with that?
Certainly, Jamie, and as I mentioned, this is going to be happening. So, to all you out there, what is your credit experience? A, I have no credit history. B, I have okay credit. I want to build my score. C, I need to rebuild my credit. D, my credit is great. I just like the webinars. Jamie, this being like one of the first things that an individual should do within their credit history life, beware of what the credit score means and what the credit experience does to their lives. I think this is a great tool for them to become their financial journey. What do you think?
Absolutely. Yeah, I think understanding how it all works is imperative to, building that score and making it work for them.
Yeah, definitely.
So
I mean, if I would have known this when I was 40 years younger, I would have been
right.
a difference.
Me
Anyways,
too.
the poll just closed. Let me make sure I get here my, let me see here. So we have 14% that have no credit score. It's a great place to be as a first timer. 14% also say that they have okay credit but want to build their score. That's definitely a great opportunity to get a better rate in all the different products and services. C, they need to rebuild their credit. And again, they're in the right place. Let us be the first option to work with you. And 29% says my credit is great. I just like the webinars.
I love
So,
that.
yeah, right. That's pretty cool. So anyways, back to you, Jamie.
Thank you. Thank you.
Mhm.
So again, thank you guys for answering that question. It kind of lets me know who my audience is and how I need to tailor this. So for those of you who have no credit history and you're just starting out, I think you probably stand to gain the most from this. But like I said, everybody can learn something, even those of you with great credit. And we love that you love our webinars and that you're here to enjoy that. So welcome and stick with us, and hopefully you'll learn something new today. All right, so let's talk about why credit is so important. Your credit report is essentially your reputation in the financial world. Your score can determine whether or not a lender will grant you a loan and what interest rate you pay. And in some cases, your credit your credit could affect your ability to get a job or promotion. So if you think about it in more personal terms, your credit is basically your word, right? It's your reputation in the financial world. That's how a lender knows how likely you are to repay a loan if they were to grant you one. Or even on the employer side, it could give them some insight into how trustworthy you are. Do you keep your word? When you borrow money, do you pay it back? There are actually studies that show a correlation between people with low credit scores tend to call out sick more often, be less dependable, and may even be more likely to steal from their company. So that's why employers tend to use that. Now, of course, a low credit score does not mean that you're a bad person or that you would do any of those things. We all know that things happen. Bumps and bruises in life come up, and you have that opportunity to kind of rebuild. But it does just drive home the fact that it is so important to maintain a positive credit score and make sure that you do keep your word when you borrow money and that you're paying back as promised. So let's talk about how credit works. And again, this is going really basic. I think most people probably have an understanding of this. But for those of you who are just starting out or maybe you're new to the American credit system, it can be a little bit confusing. But basically what happens is when you go to borrow money from a lender, you have a promise to pay back a certain amount within a certain time. So you borrow a loan maybe for a vehicle, and you finance that vehicle over 5 years with a set payment every month. As you make those payments, your lender's reporting that information to the credit bureau. The credit bureau is gathering information from any lender that you've worked with, and they are basically generating a score based on your performance in paying back those loans. And it's kind of a cycle. The more that you kind of borrow and pay back the way that you're supposed to, the higher your score is going to go, which is in turn going to allow you to continue to borrow at lower interest rates and usually for more favorable terms. Um, you may also have issues where maybe you don't really want to borrow money. You're not in the need to borrow money, but you may still have a credit score if you have ever had like a utility bill or phone bill or even a medical bill that you didn't pay. They may report the fact that you didn't pay to the credit bureaus, and that can negatively affect your score as well. So it's not just lenders that report things. Um, However, outside of lenders, it's usually only the negative things that get reported, not necessarily the positive payment history on those utility bills and things like that. But definitely something you want to be aware of if you ever, especially when we're young, we make mistakes. Things happen. We don't realize the importance of it. And maybe there was a phone contract that we broke early and got out of, or a lease agreement that we had to break early and get out of. That may be on your credit report and may need some attention in order to increase your credit score. So let's take a look at how scores are calculated. This is really important in understanding how to build your score. The biggest part of the pie here is going to be payment history. That is basically, do you make your payments on time? Like I said, 35% of your credit score is based on that payment history. So it is the most important piece of that credit score puzzle, making sure that your payments are made on time every month and that you pay things back in the timeline that you're supposed to. The second big piece of the pie here is debt at 30%. And what that means is how much of the available credit that you have are you borrowing? So they kind of look at that ratio. Ideally, you want that to be about 30%. There's little kind of boosts when you go even lower than that. So the main thing that's weighted here is going to be credit cards. Because they're revolving, you usually have a certain limit on a credit card. So let's just say it's $1,000. And then you have the ability to borrow, of course, up to that $1,000, right? And pay it back over time. However, if you're constantly charging up the maximum on that credit card, your debt usage is going to be considered high. It's going to look like your card is maxed out. Ideally, you don't want to charge more than 30%. So on a $1,000 credit card, that's going to be about $300. Now, some people get confused and they say, well, if they're giving me a credit line of $1,000, then why can't I borrow $1,000? Why is that negative for me to do that? And it's really not. You can borrow up to the $1,000. The key is to make sure that you're paying it down to at least that 300 or lower every month and not continuously carrying the higher balance. It also takes into effect when you borrow a personal loan or an auto loan or even your mortgage, as you pay down that fixed loan balance, it looks at that ratio as well. So the more you pay down on a loan, the higher your credit score is going to be until you pay it off. And then we run into something that also confuses people and doesn't seem very fair. But when you pay off a loan, sometimes you will see your credit score actually go down because you lose that trade line, that reporting on the credit report. So sometimes we see that. I always tell people if you are about to make a large purchase like a home, don't pay anything off. Certainly pay down balances, but don't pay them off because it could actually cause your score to go down. But ideally, we just want to keep those balances in general at about 30%. The next piece of the pie, the green piece there, is the length of credit history. That's at 15% of your credit score. And that basically speaks to how long you have had active and open credit. And again, this is where credit cards really come into play because they're the things that we tend to have the longest, right? Once you open it, you could have it indefinitely, unless, of course, you make some mistakes and they close it on you or you choose to close it. That credit card's going to stay with you basically until you decide to close it or until you no longer have need for credit. So the best way to build your score, and I'll talk to this a little bit more, but is having a credit card that's going to give you that good length of credit history. What this also means is that building your credit score takes time. Because 15% of your score is based on that credit history, somebody who's fairly new to the credit game isn't going to have that long history. So you're kind of going to be missing a piece of that pie. Um, that's where, patience comes in, just really kind of taking your time, knowing that you're not going to jump to an 800 credit score overnight. It's going to take some time to get there. The next piece of the pie there is new credit at 10%. And so basically, when they're looking at your overall credit history, how much of that credit is new? Whenever you open up a new loan, whether it be a car loan or a credit card or whatever it is, when you apply for a new account, it can affect your credit score at about 10%. And that's really because there just isn't any payment history on that account for them to really calculate. And they also don't want somebody or don't want to encourage somebody to go open up a bunch of new accounts at the same time. If you have multiple credit inquiries in a very short period of time, you could actually see your credit score drop quite a bit. And that's just a way of them kind of forcing you to slow down and how much credit you're getting. Finally, the last piece of the pie there is types of credit used at 10%. And that speaks to basically of the variety, the types of credit that you have open. So for instance, somebody who has maybe a credit card or two, a mortgage, and an auto loan, all with really good payment history, is going to have a higher credit score than someone who, say, maybe only has a couple of credit cards or only has student loans. They want to see that you can keep your obligations on a variety of different types of credit and that you can maintain good control of using credit cards as well as paying down other debt that you have. So one thing that you will see here, or the theme, is that in order to have a good credit score, you do have to have some debt history. That does not mean that you have to carry a lot of debt month to month or over the years to have good credit, but you do have to have some experience in making some payments and utilizing credit in order to calculate a credit score. So let's talk about what is considered a good credit score. According to Experian, 67% of Americans have a good FICO score or better. So good is about 670 all the way up to 850 in the exceptional range. So about 67% of Americans fall in that category. Those that we see in the very poor, the 300 to 579, are usually people who really don't have a lot of credit history, but they do have collections. So it could be, like I was saying, they've had some utilities or a broken lease or something like that that's been reported on their credit report, but they don't have any positive credit to kind of counterbalance that negative. That's generally who we see in there. Or if somebody has just recently filed for bankruptcy or has stopped paying on multiple loans, we'll usually see them drop into that category. The next category, fair, at 580 to 669. That's usually someone who is maybe still fairly new to the credit game, I call it, has maybe just an account or two and is kind of building that history, or they've had a few bumps and bruises, maybe a couple of late payments or a collection or two may put them in that category. Generally, as you start to build your credit history, you have one or two accounts in good standing, you're going to slide into that good category in the 670 to 739. And this is where you really start to see the pre-approval offers, lower interest rates on loans that you do take out. Borrowers or lenders, excuse me, are much more willing to work with you and allow you to borrow. And of course, as you continue in your credit history journey, you have an auto loan, a mortgage loan that you're making your payments on, you're going to move over into that very good and exceptional category. The people that we see in the exceptional category, generally speaking, tend to be a little bit older, so they have a lot of credit history behind them. They usually have mortgages that are significantly paid down, and or car loans that have also been significantly paid down, and credit cards they've had open for a really long time with low balances. So in order to get that exceptional credit score, just understand that it takes time to get there. That part of the pie that I talked about and timing really comes into play here in getting to that 8 to 850. I see you can achieve a good credit score in a fairly short amount of time, but to get up there in the very good to exceptional, bring your patience for sure. Utel, I think we've covered quite a bit in that short time. Do we have any questions from our audience yet? Oh, Utel, I think you're still on mute.
Sorry for that. Yes,
There you
that is correct. They're coming in, and I'm answering one right now, providing the phone number so they can reach out and be scheduled for a chat, since there's no fee and it's confidential. That way they can improve their own credit score. But give me a second here,
go.
and I'm going to be finishing adding this phone number. But
And we
question is,
do cover that as well. I'll have that phone number and everything listed on a slide coming up as well. So anybody who's interested in that will have an
okay.
opportunity.
So the question is, what is FICO?
FICO, yeah, that's a good question. So FICO is essentially one of the credit models that's used. So you will sometimes hear FICO score, Vantage score, Fair Isaac. These are different credit scoring models that a lender can subscribe to based on the type of loan that you are requesting. It can get a little bit confusing. It's easy to really get into the weeds, but FICO is probably the most widely used score next to Vantage score. We see both of those pretty often.
Good, nice. Uh, Somebody's asking, for those first-time credit individuals, should their kid in college get a credit card to build history?
Yes. So generally speaking, in order for a young adult, 18 years or college age kid, to get a credit score, they do have to be able to provide some sort of income or proof of income. They're supposed to. What happened is many years ago, back in the time I was going to college, it used to be kind of a Shark Tank. You'd walk onto the college campus and you had all of these credit companies that were trying to capture these kids' business, but the kids didn't have any way to pay for it. So they considered it predatory. And so they actually changed the rules saying that now, in order for these kids to be able to get credit, they have to be able to show some sort of proof of income so that they can repay it. Or they have to have a cosigner that would qualify. So as a parent, if you're trying to help your kid establish credit, then you may co-sign for a loan with them if they don't have income of their own at that point.
And they should be aware that at times those credit cards are at a higher rate.
Correct. Yes. Sometimes those starter credit cards, or for someone who doesn't have the credit history, usually they are going to come at a higher rate.
So at times it's best if they add their child to their credit card as a joint, and that way they still build credit.
Yes, they can do that, and they don't actually have to do it as a joint. And I'll speak on this a little bit later, but you could do something that's called an authorized user, where you're basically putting them on that card. They're not legally responsible for repayment, but they're authorized users on that card. And oftentimes that will still get reported on their credit report so that they can build history that way. Though it's important to know that not all lenders do report authorized users. So you'd want to check with your credit card company to make sure that they do report if that's the goal.
Good. Um, Question is, how many years of having a good payment history with a credit card is needed to having fall into the exceptional good credit score? Can I be into that category by only having a credit card? And I believe you covered part of this already, but it's one of the questions.
Yeah, and it's a great question. Generally, I don't like to say for sure yes or no because sure enough, somebody will prove me wrong, right? But generally, you have to cover all those pieces of that pie that I showed you. So if you only have one credit card and that's all you've ever had, you're not likely to be in the exceptional category. I'm not going to say it's impossible, but you're probably going to be more in like the excellent category if you've had that card for a long period of time. Now, reporting things are reported to credit bureaus over a 7-year span. So I'm not going to say you have to have credit for 7 years, but generally it's 2 years of good on-time payment history is going to give you the best kind of advantage as far as scores go.
And you mentioned that credit history goes back up to 7 years.
Correct. Yes, things are continually reported to a credit bureau for 7 years from the date of the last activity or, continuously. And then the payment history is actually 24 months of payment history. So, yeah, that gives you the best.
So there will not be any history further than that, even though it's a charge off or anything like that, that will affect the credit score.
There shouldn't be. So another good question. Things are generally reported for 7 years after, if you had a collection or something and it's past 7 years from the date of last activity, it is supposed to fall off of your credit report. It basically expires. Now, it doesn't mean that you don't still owe that money. It's still out there, but it's not reportable anymore at that point. Now, we have seen collection agencies who will alter the date of last activity in order to continually report, or it gets sold and they put the sold date as that date of last activity, and then you have to go in and dispute and prove that it's older than 7 years and shouldn't be there.
Cool. Last one for sake of time.
Sure.
Uh, Follows, if you have opened a credit card and have not kept up with your payments within the first year, how could I get back on track? And if you've been paying your car payment late, but still pay it every month, how could one get their credit up? I just started my credit last December.
Okay. Another great question. So, it happens, bumps and bruises. Life just kind of happens, and sometimes we get off track a little bit. The important thing is that you've got to start from this point forward, making those payments on time, paying down the balance on the credit card as much as you can. And same thing with the vehicle, just making sure that the payments are on time from this point forward. There's not much you can do about the payments that have already happened. They're late. It's just going to take time to start to build that positive payment history. One thing you can do after you have had a significant amount of time of making payments on time, so I would say probably at least 6 months, you could look potentially at refinancing that vehicle. Your credit should look a little bit better, so you may even qualify for a lower interest rate. refinance it, and then it kind of starts fresh with a brand new loan that you can then continue to make on-time payments. But it may take a little bit of time because lenders, obviously, if you've had late payments recently on a loan, another lender may not want to take on that risk or that obligation.
Okay, Jamie, I think for now, we should continue. We're right up top of the mark, uh, close to 12 o'clock. And we got a couple more pages to continue and cover. Thank you so much.
Absolutely. And those were great questions. So keep them coming, and we should have another opportunity to answer some a little bit later.
Thank you.
All right, so this is kind of what we all wanted to know, right? And some of this I have covered already, but it's basically how to build your credit score. So whether you are starting out fresh or you have a few bumps and bruises and you need to start over, these are the steps that you want to take in order to start to build that positive credit score. The first thing you can do is take out a small loan or open a secured credit card. Generally, lenders will have some type of either credit builder loan or a short-term small balance loan. Ours is called a fast funds loan that would allow you, usually it's very minimal credit requirements, and it would allow you to kind of get a start on making fresh payments. Now, I don't advise you do this if you can't afford to make those payments, because obviously if you miss a payment or you're late on your payments, that's going to hurt your credit more than help, right? But if you know that you can afford to make those payments, you can open up one of those small loans and kind of start the process of building payments. Now, another thing to keep in mind on those short-term loans, such as our fast funds loan, it's only going to help your credit for the length of time that it's open. So it's going to kind of build some credit history, but when you pay it off, your score may go down. That's not the important thing in this instance. As you're starting to build, what we want to see is positive payment history. Because once we've seen that you've done that, you've paid the loans back, even if your credit is not quite where it needs to be, we might be willing to lend you a little bit more. And then we stretch it out to the 1 year loan. Or you also have the option, which I actually think is the preferred option, of a secured credit card. And basically what that is that you're saving a certain amount of money. I believe the minimum is 250. I usually recommend at least 500. Some people, if they have it available, will do 1,000 just to give them a little bit more credit line. But you're saving up whatever amount that is. And then we would pledge that, basically set it aside on hold, and issue you a credit card for the amount that you've saved. That credit card then gets reported to the credit bureaus, just like any other credit card. And as long as you use it responsibly, keep your balance low, make your payments on time, that is building some credit history and payment history and is giving you that long-term credit history that you need as opposed to those short-term loans. So that's where I would start out, is opening up like a secured account, or even doing, if you don't have the savings, doing one of those small short-term loans just to start to build something. As I've mentioned already, it's really important that if you're using a revolving credit account, like a credit card, that you're keeping your balance low. You want to keep it at 30% or less. I actually have a member that I've been working with. He's trying to get approved for a student loan, and his credit wasn't quite where it needed to be. So we've been working. We got him his secured card. He was doing great. His score went up over 100 points, and he went above that 30%. He actually kind of maxed out the card briefly, and his score dropped almost 100 points because he maxed out the card, and it just happened to report before he made his payment. So, he's emailing me, and he's kind of, stressed out about whether or not he's going to get approved for the student loan now. And I was like, calm down, make your payment, bring your balance back down below 30%. Your score is going to jump back up. And sure enough, that's what's happening. So you want to try to keep it, like I said, there at 30%, or you're going to see a big decrease in your score. Again, most important, make sure all of your payments are on time. Even if you've had the bumps and bruises, if you've had a couple of late payments, you got to start now with making it a priority that all of your payments are made on time. If that's something that you struggle with and you need help, talk to one of us, talk to one of our counselors. And again, I'll share the information on how to do that, but we can help put you on a plan that will make it a little bit easier to organize your finances and make sure that payments are made on time. we spoke to this a little bit earlier with one of our questions. Consider a cosigner or authorized user. So you may have a parent or a spouse that is willing to cosign if they have good credit. Because if they don't have good credit, then you don't want them to cosign for you. But if they do have good credit and they're willing, then you can ask them to cosign. And that will often make a lender feel a little bit more comfortable with lending you money, even if your credit is not quite where it needs to be. Um, but keep in mind that when you have somebody co-sign for your loan, let's just say it's an auto loan, if you don't make that payment, that's going to affect their credit as well. So if you bring somebody on as a co-signer, keep that in mind and be really respectful of their credit, that they're putting themselves on the line to help you out. And so it's really important that you keep that obligation if you're bringing a co-signer on. And then the other point that we talked about was an authorized user. And opposite of the cosigner, this is where that person is actually adding you to their account as an authorized user. Again, not all lenders report authorized users to the credit bureau. So you'll want to make sure that the credit card company or whoever it is that you're adding to or being added to as an authorized user does report that. Otherwise, it really doesn't do anything to help you out. But if it does, you could actually see a really significant score increase in a short amount of time because you're gaining all of the credit history that comes with the account that you're being added to. So if that person has had that account for 7 years and they have a perfect payment history, you're getting all of that payment history and your score will likely shoot up quite a bit by doing that. So it's a little bit way of a cheat to get that high credit score really fast if you're needing to, and that can kind of lend to you being able to get your own credit at favorable rates as well. And finally, be patient. Like I said, that piece of the pie is time. It's just building the payment history over time and showing a consistent behavior of responsibility, and that you keep your word in paying things back. It doesn't happen overnight. I did finally hit the 800s, but I'm in my 40s. So it took me a lot of time and a lot of debt really to get there, and making some mistakes along the way. I may have been able to make it before then if I had been if somebody had taught me this stuff, I guess when I was younger, I might have been there a little bit faster. But be patient. It does take time, especially if you've had some bumps and bruises. It might take a little bit more time, but you can get there, and we're happy to help you do that. So we've got our second poll, I think, and final poll. Butel, you want to help me out with that?
That is correct. Second poll, do you monitor your credit report? That is the question. A, I check my score regularly, but not the full report. B, I check both my credit score and report regularly. C, I have checked it before, but not regularly. D, I have never checked my credit report. Definitely, this is a great thing for those first-time credit borrowers that they should be learning how to review their credit score or their report and not pay for it, because a lot of people fall into the trap of paying for it. Jamie, you would like to talk about it?
Yeah, we'll actually be talking about that, but you absolutely do not have to pay for your credit report. So we don't want anybody to have to do that. I will go over some ways that you can access it for free, and why it's important to continue to monitor it on a regular basis. So hopefully we'll have those responses here in just a moment, so I can kind of see how everybody is.
All right, so let's see.
Okay.
It says here, Jamie, 32%, I check my score regularly, but not the full report. 17, I check both my score and report regularly. 44%, I have checked it before, but not regularly. And a small percentage have never checked their credit report.
Okay. All right, that's good to know. So if you were the couple that said that they've never checked their credit report, now is the time to do that. It's really important, not just for credit score purposes, but to make sure that nobody is using your identity to open credit. Identity theft is a huge, huge issue. It has been for some time, but we definitely saw an explosion of that during the pandemic, and a lot of fraud with unemployment and things like that. So it's really important to monitor your credit report and to check it. If you're young and you're just 18, you might be thinking, well, I've never checked it because I don't have any credit, right? But what we have seen, unfortunately, is that sometimes family members, could be a parent or a sibling, will use their child's or siblings' information in order to obtain credit. I have actually worked with somebody whose mother had used their credit to open up a bunch of credit cards, and just they basically had ruined credit before they even had a chance to get started. And usually when it's fraud like that, you would have to file a police report, and he really didn't want to file that against his mother, and so it was a mess to have to clean up. But really important to check it, make sure that there's not any funny business going on. Um, and then for those of you who, have checked it before but don't do it regularly, kind of same thing. It's a good idea to monitor. I would say at least once a year, you should be monitoring your credit report. I actually fall in the category of I check my score almost obsessively, but not always the full report. I do try to look at the full report at least a couple times a year just to make sure everything's good. But I use the score as kind of my alert. If I see a drop in my score, then I'm checking the report to see what has changed. But otherwise, just keeping an eye on that score will usually let me know if things are going in the right direction. So let's talk about, how do you check your credit report, especially if you've never done this before. This is important. The federal government has mandated that all three credit bureaus are made available to consumers at least one time per year when it's requested. And you can request that for free through annualcreditreport.com. That is the only site that's actually verified by the federal government as being able to do that. Now, there are other ways, of course, to get your credit report, but that's the one that will actually give you very detailed reports from all three credit bureaus for free. Now, they will not give you your score for free, and they are not required to give you the score for free, but they do have to give you the report that's got all of the detailed information. There are other ways to get your score for free as well, and one of those is through your online banking with the credit union. We have something called Savvy Money, and it is built into your online banking either via the app or if you go via desktop. You can get your TransUnion score and report for free on demand, basically anytime you want to. And it's a great way to monitor, especially if you are working towards a certain type of loan approval. When you speak to a loan officer, they'll usually give you a guideline of where you need to be. And so you can use that to kind of track your progress. And, I think it's also kind of fun when you're building credit or you're trying to repair it to kind of keep tabs on it and watch that score grow. It gets exciting. So definitely utilize that. There are other apps out there. Experian does have a free version of their credit monitoring that you can sign up for on their app as well. And so I actually use both. I use Experian and the credit union Savvy Money, so that I get both, like Experian and TransUnion. So you can do that, and that's a great way to keep track of it, and really important to do that, again, not just for tracking your credit score, but for looking for identity theft and fraud. So as we close out, I'm just going to go through some tools and resources. The first is going to be our website, financialwellness.aacreditunion.org. That is the website for my department, the financial wellness team. That's going to tell you a little bit more about us, as well as how you can make an appointment with one of our counselors if you want to do that. We also have navigator.aacreditunion.org, which I'm actually going to switch over here. This is one of our great tools that is free for our members, especially if you are starting out and kind of learning about credit and how to manage money. This is a great resource for you. They have, articles and videos and some games, and they even have contests where you can win money sometimes. But you can sign in there, and you have access to basically an A through Z of anything financial that you'd want to know, from starting out and building credit to paying off student debt or applying for student debt or student loans, and even preparing for retirement. So no matter where you are in your financial journey, the Navigator can help you navigate that part of your life, whatever you're going through. And of course, as I mentioned, that third tool there was Savvy Money. That's our online credit monitoring tool. You can access that directly at savvymoney.com/AACU, or you can log in via your credit union online banking and it'll be under the Financial Wellness tab. For those of you who are interested in having an appointment with one of our certified financial counselors, we do have 5 counselors on staff. We help with, bruise credit, building credit, paying off debt, disputing things on credit report, basically anything other than investments. We let our flagship financial group handle investments, but anything that has to do with credit and debt, we can help with. We're also here, to offer the continuous accountability, support, and guidance as you take your financial journey. And then, of course, we offer these educational webinars and seminars throughout the year. If you're interested in an appointment, you can give us a call at 833-FINWELL, or you can email us at financialwellness@aacreditunion.org. Butel, I'm going to hand it over to you to go over some of our promos before we jump into questions.
Thank you, Jamie. So as you see, what we're trying to do on today's webinar is make sure that this is a first for everybody. So it's your first opportunity to learn of how to build your credit, and your first opportunity how to get your credit score, your first opportunity to see how we can help you improve your credit overall. So on this quarter, we're promoting financials first. By this, what we're trying to say is, look in your wallet, see what type of credit card you have in there. It may be from a different institution than ours, but have you really verified or compared the credit rate or interest rate that you have on that credit card? Most likely it's over 2 digits, at least 20+%. Here at the credit union, just as a financial first, we can review it. And usually we can get it pretty low. Our lowest rate is 8.5, and a lot of people have that rate with us. And our highest rate in our credit card is still lower than a lot of the credit cards out there, lowest rate. So why pay extra in interest when we can help you save that money and you can apply it for probably an emergency fund or something else? The same thing with your vehicle. Some people think they have my car, it's paid off, but you know what? You have other expenses. And having a collateralized loan brings your rate lower. So again, let us be the first one to see how much we can help you with your car so your rate is lower. You get to use that equity of your vehicle to pay other debt that may be much higher or that is taking big payments from you on a monthly basis. And then once again, you have freedom and liquidity of funds to save some money for future travels or anything that you would like to save for. The same thing with the mortgages. Reach out to us even right now that the mortgages went up and they still on that climbing hill. At times it's best to invest now and maybe refinance, because later on when things get better, you can always modify it. And there's really an advantage for you because it's going to be a much lower rate. So within the financial first, please let us help you. Let us see what we can do. Let us see how can we make it better for your life, because as a member owner, that's part of our duties to help you out financially. With that being said, while many of our programs don't require for you to be a member owner of the credit union, all our loan and savings products require a basic membership or an umbrella account with the credit union, and that's a savings account. As you can see on your screen, here's our financial institution that you can trust. And what this does, it has a QR code on the right side in the corner. So if you have a moment and you're not a member owner yet, scan that. It's going to take you to our membership application. Once you're there, you're going to see an area that says towards the end, promo code. If you enter the promo code B as in boy, D as in David, 4412, we will credit the first deposit into your account, so you don't have to deposit anything right away, of $6 as a new member owner. Plus, once you're a member for life. It doesn't matter if you leave the state. It doesn't matter if you leave the air transportation industry, if you go to work for the city, or you go and open your own company. You will always be eligible to be a member as long as you keep it open, because once a member, you're always a member. But if you close it and you leave the membership, then you will not be able to get back into the credit union. So we want to make certain that you take full advantage. And even if you move, like I said, or change job, that you keep the membership open. There's many ways that you can join. You can join online, as it shows here on the presentation, aacreditunion.org. You can go to your local branch. As you walk by sometimes at work, you see the branch and you feel curious what's in there, jump in. They're friendly people, smiles. Jamie comes from the branch, I come from the branch, and many others of us that are here come from branches, so we know how to take care of you. Any additional questions or anything like that that you have, like I said, either put it on the web on the survey at the end of the webinar, or you can email us directly at weworkforyou@aacreditunion.org, and we will reach out back to you with an answer or with a subject matter expert contacting you as well. To bring things back to the presentation and how to improve and gain benefits from the credit union as a member owner, there's a couple of promotions that we have, and we would like to mention these. If you were to take advantage and open one of our checking accounts, you are eligible to earn $25, and it's very simple. You open the checking account. Once you spend $25 within the first 60 days as a debit card purchase, we will reimburse the $25. So if you go shopping at Target, Walmart, you use your debit card, the first 25 within the first 60 days, we will reimburse that. It's not an ATM transaction. Let me go and take 40. That's not going to work. It has to be a debit transaction. So I wanted to make sure that you were aware of that, of that benefit also, that you were getting $25. As I mentioned before, we refinance vehicles. Let's look at that. Again, we are trying to help you lower your rate. So if you bring a refinance vehicle from another lender, we are able to go as low as 1.90% on it. So you have, let's say, a car financed through Toyota, you bring it to us, and you will see the comparison of rates. I mean, again, a lot of people are very surprised that they're paying 14, 15% on their car loan, and we can bring it down to single digits again. And again, we have programs that even if it's a double digit and your credit score is bruised, as Jamie said, programs that will help you lower your interest rate on a yearly basis. But for more information, please feel free to reach out to us and we will give you that. Like I mentioned before, our credit cards have great rates. And now, if you were to open one of our platinum low reward cards, we have 0% interest rate on balance transfers for the first 6 billing cycles. And again, the rates are much lower. And again, the balance transfer is the one that gets 0% intro rate for the first 6 billing cycles. So just another great way to take advantage of that. And at the same time, we also provide connection points on our credit cards. Once you open a regular Platinum Rewards card, you could get up to 25,000 connection points, which you can use to purchase trips, gift cards, and many other items. So again, we wanted to make certain that you are aware of what we have. We're going to move forward for those that are member owners already, wondering, well, what about me? Well, you're a member owner. You have the ability to give the gift of membership as a gift to your family members, to your kids, your wife, your brother, your mother, or that person at the air transportation industry that is to your right or to your left. Somebody that you know that works with you that is eligible, that is probably needing some help within their financial life, that you can refer them. If the account is open, you can get $25 for each account referred, and that's up to 10 a year. That's $250. That's pretty good now for the holiday season coming up, starting with Halloween, etc. So again, it's one of those things that, hey, money helps every time, and that's what the credit union is here for. So what we're going to do is we're going to go to the next page, which is our question time. So we're going to go and see what other questions we have pending. Jamie, you're ready? We got a couple of minutes left. So
I'm ready. Bring them on.
all right. So somebody wants to know, what is a balance transfer?
Yeah. So balance transfer is basically if you have usually we see this more with credit cards, but it could affect, any other type of personal loan as well. But if you have a balance on one credit card, and let's just say the rate on our credit card is lower, so you want to take advantage of that, you can actually apply to transfer the balance from one credit card to another to take advantage of that lower rate.
Correct. So you're trying to transfer from a higher rate to a lower rate. This is going to help you improve your cash fluid based on money that is going to be available, and it'll help you up as well, hopefully improve your credit score as well. The next one is, they're asking, I can use the promo code on a secure credit card? I do have an account with AA. So this individual that is asking this question, I imagine you're saying that you have an account with the credit union, or is it that you have an account with American Airlines, the credit card that American Airlines has? The promo code that I mentioned is for a new membership within the credit union, that BD4412. That's so you can open an account with us and become a member owner, and then you can take advantage of all our products and services. So another question that we have is, do we charge a fee for transfer of the balance? The answer is no. We don't charge a fee for balance transfer in this case, like a lot of other institutions do. We don't even have an annual fee on our credit card. That saves a lot of money. So that's another one of the perks that we have as being a member owner itself. So let's see what else we got here, Jamie.
While you're looking for the questions, I just want to say that the fact that we do not have a balance transfer fee is incredible. I don't know of any other credit card that doesn't charge at least 1% to do a balance transfer. Most are between 3 and 5%. So it's a great opportunity to transfer to potentially a lower balance and not have that fee. It's pretty amazing.
Correct. And they're asking, what is our website? So basically it's aacreditunion.org for any other products and services. Now, if you're trying to reach the financial wellness team, there is their website there as well, and the information for those that are asking for it. So you're able to, somebody would like to open a secure credit card to build credit, please feel free to reach out to us, put it on the survey, and we'll have a subject matter expert reach out to you and help you through the process of opening that secure credit card. And the minimum, I believe, is $500 to open the secure credit card, Jamie?
I thought it was $250, I think, is the minimum.
Okay,
but yeah,
so
usually, yeah, 500's it gives you a little bit more room to not go over that 30%.
Correct. Yeah,
that's what I recommend.
Somebody had a question about, so 30% out of 500, you can only use $150 in order to keep a good credit history, I would say, Jamie, correct?
Yeah, so it's a guideline. Keep that in mind. It's a guideline. If you go over that, for instance, and let me clarify, it doesn't mean that you necessarily need to charge 30%, right? You can charge as little as $10 a month, and you're still, as long as you're making a payment, you're getting the credit history and payment history, all of that's great. You don't have to charge 30%. And if you go over 30%, it's not the end of the world, but you may see your credit score drop a little bit. Or if you currently have credit cards that are already over that 30%, by paying them down to 30% or less, you should see an increase in your credit score. So if you happen to open up that card and you charge more than that 30%, when you go to make your payment, ideally you should pay it off, but at least pay it down below 30% so that you don't take that hit to your credit. Does that make sense?
Yes. For that individual asking how to rebuild their credit if the person has is in bankruptcy. Again, feel free to reach out to the financial wellness team. If you're a member of the credit union, we will be able to assist you with that rebuild and make sure that we put you in the right path for your financial wellness. Um, so if somebody checks their credit report, is that going to give them a hit on the credit score?
No, actually, if you are pulling your own credit report, and that's a great question. I'm glad somebody asked that. If you are pulling your own credit report through whether it's annualcreditreport.com or it's through like Savvy Money or Experian, that does not affect your credit score. If you apply for credit or if you see one of the counselors and you ask us to pull your credit because we are a financial institution and therefore considered lenders, it is a hard pull that will show an inquiry on your credit report, which may affect your score. Usually they say it's somewhere between 2 and 10 points, kind of depends on other factors. So it's a minimal effect, but it can affect your score if we pull it. But when you're pulling it yourself, it does not affect your credit score.
And you said they're able to go into their account with us and online, and they'll be able to see their score there. And when they click there, they should be able to pull all their 3 reports at no cost.
With us with their online banking, they will not have access to all 3 reports. It's just going to be the TransUnion report and score. Through annualcreditreport.com, you have access to all 3 reports, but not the scores.
Okay, good to know. For those asking also, the product that we offer is a Visa credit card. That's part of our product, so it's accepted worldwide, just like any other major Visa card that you may have. Good in Europe, even our Platinum Rewards credit card doesn't charge a foreign fee. Our Platinum Reward card does not charge a foreign transaction fee itself. But if you have the regular credit card, the low rate credit card, thanks to our checking account product that I mentioned, and again, based on the details, once you ask, you're probably able to get $20 back on uh, fees itself from your ATM card itself, so you can balance out certain things if you get hit with a foreign transaction fee. Uh, what else we have here? Let's see what we got. Uh, how to rebuild the bankruptcy. We mentioned that to reach out to you. That will help them on their path. Uh, let's see, I believe, oh, the other one is about somebody is going to apply to the cadet program. So
Mhm.
I advise them to please reach out to your group in order to cover the cadet program for pilots of American Airlines. That will help them with their studies. Is that correct, Jamie?
Yeah, so it's a new product where we are teaming up with American Airlines to provide the financing for the approved cadet schools through American Airlines Cadet Program. So yes, we'd be happy to answer questions that you have um, and help you with that process. So the loan process is actually going to be through student choice, but we can guide you through. I can do like a whole presentation on just that. We don't have time for it today. I
That's
notice we're
correct.
at 12:31. But yes, put that in the survey. We can reach out to you or give us a call and we'd be happy to help with that.
Okay, last question again, because as you mentioned, the time.
Mhm.
What is this thing about boost, credit boost or something like that?
Yeah, that's a great question. So Boost is something that is available through Experian. And so if you don't have credit, so you've never had a credit card, a car loan, anything like that, but you're wanting to try to establish some sort of history, you can sign up for their Boost program. And what it does is it tracks things like your phone bill, your electric bill, maybe even your rent payment by linking to your checking account, and then they're monitoring your checking account as you make these payments to see if you make the payments on time every month, and that gets reported to the credit bureau. I'm a little bit leery myself just because I don't necessarily want them to have that kind of access to my checking account. Not that they're not going in and doing anything in there. They're just monitoring the transactions. But for someone who doesn't have any credit history and you're wanting that little boost, it can be helpful. If you already have some credit history, we're seeing that the effect is pretty minimal. It doesn't give a big boost to the score, but for someone who doesn't have a score, it can be helpful.
Jamie, because it's 12:32, out of respect to our audience, to your time, my time, that I'm going to call the webinar and make sure to let everybody know to please, on the survey, request a copy or visit us in our website, reach out to us, let us help you out. That's what we're here for as a member owner. We want to make sure that you take advantage fully of what we're doing. So again, thank you again for tuning in. Remember that if we didn't get to your question or yours is more of a personal nature, to put it on the survey, and we'll have a subject matter expert reach out to you. As a reminder, make sure you check out our webinars on Thursdays at 11:30 Central Standard Time. We will present our different topics. If you go into our website, you can see our topics there as well. Please be sure to follow us on Facebook, Instagram, Twitter, and now we are even on YouTube. So make sure you like, smash that like button itself, and subscribe. That way you get all our topics out there. Once again, wanted to appreciate your attendance, and on behalf of Jamie, myself, and the entire credit union, we hope you have a great day. Please stay safe, healthy, and happy. Jamie, anything else you would like to add?
That's it. Just thank you so much for attending, and we look forward to having you on future webinars. Thanks a lot. Have a great day.
Thank you, everybody.